Well, I think one has to look at investing as a form of gambling. Although, let me say, I think gambling is a bit of a misnomer. I would classify all of these competitive realms of where success is judged by counting your winnings at the end of the day into two categories: games of chance and games of strategy. So I have no interest in games of chance. It's like flipping coins. But games of strategy are quite appealing. And investing and playing poker and going to the horse races are all very sophisticated games of strategy, as is bridge or chess. They're all in the same arena. Now, I would make this statement that somebody who is successful in handicapping at the racetrack and also had some of the attributes that you would need in regard to, might likely have them anyway, in regard to investing in stocks, such as pattern recognition, the ability to get behind numbers and remember numbers and identify critical variables. I would be very surprised if somebody who wasn't successful in horse racing, who was successful in horse racing, wouldn't be able to knock the ball out of the park in terms of stock equity investing. And I realize that investors are generally looked upon as being a higher form of human existence than people who frequent the racetrack. But the racetrack was a wonderful training ground for me. Now, one thing that it provided me with is a whole slew of variables that had to be considered when deciding who might win a race. And so that's the analytical process. And I think anybody that looks at stocks, would also recognize that it's not just one thing. I mean, there are a number of critical variables. From time to time, you have to focus on one versus the other, and that's analysis. But the other part of horse racing, which is so important, is money management, is knowing that when you walk in there, it's kind of like what Warren Buffett said: every race is like Mr. Market coming up to you and saying, do you want to get involved in this race? Do you have an opinion? How strong is your opinion? What's the risk reward? And you're not going to be successful unless you spot bet. You have to be very selective where you think you have an edge. Otherwise, you get destroyed. There's an old saying that if you bet every race, you can't win. But if you bet a race every now and then where you think you have the edge, and you bet it, with a significant part of your bankroll, that's the only key. And of course, that's a direct analogy to the stock market. Now, I'll say two other things that are so-called handicaps if you're at the racetrack. Number one, everyone knows it's not quite honest. And, there are trainers who are not letting their horses do their maximum, their drugs, and so on and so forth. Plus, anytime you make a bet, it's a not a zero-sum game. It's a negative sum game where the state is taking out, anywhere from 15 to 18%. Then you go to the equity market. It's also not a zero-sum game. It's a plus sum game where the market's appreciated, I think, at 9 or 10% every year since 1932. So your odds really go into the equity side. So that's the basis of my outrageous statement that if you're successful at the racetrack, you can take those skills and bring them over into small cap value investing or any kind of investing, and your chances of succeeding are far greater than you can imagine. And I would put a good, successful racetrack guy with a guy who is curious about companies and could handle the environment of looking at stocks against any business school graduate, and bet on him because. Again, the racetrack is a real life comparable to what the investment process entails.